All right, ladies and gentlemen, I hope you had a wonderful day. It was absolutely wild in the market, but before we talk about everything that went down, I'm about to sound like Drake because it may not mean nothing to y'all, but understand the yield curve is re-inverted. So, yeah, man, this is actually a gigantic deal. Again, I know a lot of people, they care about the yield curve and they don't, but if you have watched any of my videos, you know that I am a weirdo and I really care about this. That's why, as of recently, not too long ago, when we had our first set of rate cuts and the yield curve re-inverted, it got me thinking, and I was looking at a lot of things, and we were even doubting it, and now, sure enough, 3 months later, we are now back to an inverted yield curve. Right now, it's showing positive, but at one point today, the yield curve re-inverted. Why is this so important? If you've been following along with any of the bond information and TLT plays, I mean, take a look. This right here is the 10-year bond. We were getting worried about that 4-5, and there was all of that pressure. Literally one of the biggest post-election reactions, all of this stuff going on, but 4-5 held. Rates have already moved down a quarter in the last couple of weeks. Even if you go to the 2-year bond, again, the 2-year, 10-year now, you'll see they are practically matched up. And now this is saying a lot of different things. It's creating an opportunity for different bond plays. We're going to talk about that here when we get to the plays. But also, as far as policy error and how the market feels about things, this is kind of just telling you, I mean, imagine how we were prior to the yield curve uninverting. The fact that we are inverting again, even though something has changed with monetary policy, the bond market is going back to where it once was, and this is screaming a lot of different things. Now, I don't think anything is going to materialize instantly. That's kind of the good part about the yield curve, because even when it uninverted, we're like, whoa, look at what's happening. Wait, is this because of politics or not? Took a couple of months, and now it's showing you, yeah, there's no alarm, and now we're kind of back to square one. So a lot could happen from here, but now match it up to the timeline, inauguration, and getting ready for next year. I am sure we still have a lot in store. So I wanted to start with that, but I'm telling you, what went down today was absolutely nuts. It was a little bit of a post-holiday reaction. I feel bad because I swear I do this every holiday. Day after Thanksgiving, I'm like, oh yeah, it's also really slow the day after Thanksgiving. That's usually how the volume is. I don't remember till afterwards, but that's where we were today, and it looks like we didn't do much, but you had headlines all the way from crypto down to Europe, France, and Germany, even some data in China, and then we had our data, but you didn't get much market moves, but it showed you something, and now that's what we got to talk about for the rest of the week. So I got the recap, I got the plays, a lot of different plays idea. We made a couple of moves today too. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Walking to the couch, it's the joints on the legs. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, I already told you there was a lot of action and little movement. If you take a look, you could see it, but pay attention. The Russell and Dow didn't do much. The SPY was only a 0.25% move, but take a look at the Nasdaq. That was 1%. So I think the post-holiday volume was the culprit. I really think we have a lot in store for December. Maybe we start off slow, but today did show you the potential of the data. And what I mean by that is looking at the rate cut odds. So we had a couple of things to deal with Europe, and there was a bunch of different headlines from the Trump and the BRICS all the way down to crypto. But after we got the data in Fed speakers today, you already watched the rate cut odds jump about 10%. Last week, they barely even moved that much in the last 2 weeks. So right off the bat, to start off with the ISM data, we're going to get a little bit more tomorrow, but you could already see how people are reacting. Even Fed Waller today, he started talking pretty dovish, and for some reason, again, I think it's because the holidays still and a little bit of that lower volume we had, the market was really reactive to it. But like I told you, why this week is so important is because now all of the data is alive. Every single little piece of data, you are about a week and a half, 2 weeks out from the next Fed meeting. This is going to start moving the odds, and as people start to settle in, again, the yield curve and looking where things are at, this has the potential to change a lot of things and give you that final runway up until the inauguration. So we got a little bit of that. There was a lot to deal with. We'll talk about some of the other factors, but now, given that it's a big data week, tomorrow you are going to get the JOLTS jobs opening. Remember, there was a huge surprise on the JOLTS last time, but we barely moved. So now that this is the JOLTS right ahead of the Fed meeting, we'll see if there's a bigger reaction tomorrow than on Wednesday. The ISM services, the ISM today on the manufacturing, that was able to move things. The ISMs and the PMIs were all strong, but the price components dropped. So as everybody's worried about inflation and things overheating, all of the data is saying, yeah, things are good, but every single price metric is going down except for the stock market and real estate. But the whole point is Wednesday, even tomorrow, we're going to have data that's going to be able to move the bonds, and then the cherry on top, it's going to be the non-farms on Friday. So watch out for that. But now here's what I want you to realize from a market movement perspective. You got three options every single day until the inauguration. And yeah, maybe we go down, but even to the downside or upside, the same theme remains. It's either going to be S&P 7, and don't be so strict about that. What I mean by this is that you are going to watch a day where the big tech and the mega cap tech, maybe 10 to 50 companies lead the day. Everything else sells off. Those companies go up. That's why you have the Nasdaq up and the Dow and Russell kind of struggling today. That's what I would call the S&P 7. Then you'll have the other days where things broaden out. Maybe Nvidia and Apple and Amazon don't really go up, but everything else broadens out. The dividends and value stocks start running. That's what I call the S&P 493. And then you're going to have the days where everything everywhere all at once goes up, whether it's bonds and the dollar and gold, you name it. Everything moves in tandem, either up or down. So these are your three options until the inauguration. This is kind of the structure of the market up until we start really getting more data and start really flowing into the new year. So we'll see how that all plays out, but I hope you all are prepared. And now to summarize what we dealt with today, this is why I'm saying we had a lot of action, a little movement. There was everything all over. One, Ripple. Crypto did go crazy, but today it was all about Ripple. It's actually insane because every other crypto started selling off, and Ripple was up anywhere from like 40 to 80%. That means a lot of money went here, and nobody really knows why. Again, there was news over the weekend that U.S.-based companies that Trump administration is going to try to say no capital gains taxes. It's like Ripple, Stellar, H-Bar, and then there's one more. I think Cardano. Those are like U.S.-based crypto companies. They're saying no capital gains taxes. Maybe that contributed to it, but it was wild. It has a lot of people looking all over, it feels just like 2018, man. Again, I was even looking up my old videos. Go look up me in 2018. I say the same thing. I was warning y'all. I said be skeptical of all of it. Even in 2018, I say make money off the big ones. You can make money off the altcoins, move it to real estate, rinse it. Oh, man. You should go check out the old videos. I sound like a child, but all in all, man, this Ripple move, it's a blast from the past. It has a lot of people talking. They don't know why. I'm sure you're going to see a lot more of that this week. Remember, that crypto story is still in place. There was even another headline about a government wallet. They moved some Silkcoin Bitcoin. It was like $2 million to Coinbase, so people got a little worried about that. But again, Ripple still went crazy. Then middle of the day, you had a headline from Trump. He said that if the hostages aren't returned, the whole Israeli Hamas thing from like a year and a half ago, he said if they do not return the hostages, they're going to rain hell on the Middle East. So I don't know if that's Trump stopping the war, but we'll find out. But that was another one. We didn't get much action from it, but that was in the mix of it. And then France, dude, this was crazy. They're literally Liz Trussing. If you don't remember Liz Truss, that was the lady in the UK. Remember they had a live stream, which will last longer, Liz Truss or the head of lettuce, because Liz Truss put in a crazy budget and then they blew up the bond market because everybody freaked out. Well, yeah, France is kind of doing the same thing. So they smashed this budget through that was just absolutely wild. And both sides of the government were like, nah, they said no confidence vote. And now you're watching the same type of blowout. It's in the early days. We'll see if they get a hold of it. Technically, via the bonds, I think France is more riskier than Greece right now, which is absolutely wild if you know the history. But then again, Greece has kind of stabilized. I mean, I don't know. I'll leave that up to you. But the whole idea here, this is what got us off of the morning, and this had somewhat of a negative effect. Remember, we were hearing some negative things about Germany not too long ago, too. So that whole EU stuff, and even with the strong dollar, it's wild. But that was another part of the day. And then finally, the yield curve re-inverting. This is not for no reason. I'm telling you, it's leaning more towards policy error, or at the very least, the fact is that rate cut in the beginning meant nothing. I mean, that's what the bond market is telling you. Your yield curve should not have re-inverted after inverting and staying inverted for 2 years. I'm telling you, very wonky situation. That's why I'm sure these next couple of years are going to be interesting. But the fact it's doing that, it's going to create opportunity, and we'll talk about that here in a second. But all in all, man, very wild day, little movement. We have a lot more in store this week. And before you know it, man, as we get into the end of the month, once we get over Powell, things will calm down, and then it'll be a whole new year. And then we really either harvest or start planting the same plants again. I don't know. See what happens in the next year. But Chad, let us get into the plays. So right off the bat, I got a couple of different plays. I think you'll be excited for the TLT play, but I'm going to make you wait, and I got to start with Pat the Rat, baby, Intel. So Pat the Rat, that's my very mean nickname that I give to Pat Gelsinger. I mean, the chat helped me come up with it, but finally this guy is leaving, the CEO, and the stock popped up immediately, and then by the end of the day, it sold off. So there's a couple of things at play. I think this news is bullish for the company. Again, we even bought it for the long term. Again, they have been underperforming all of the AI stuff. Remember, they were a dominant factor in chips, and they gave up all of that to everybody else. So it was a very, very shameful fall from grace, and a lot of people didn't like it. There was even reports that they low-key pushed Pat out because he wasn't doing that well. But I think this news is bullish. The full effect of it is going to take time to develop, but I'm looking for even short-term plays here as we get more details. Literally, as the days go on and then we try to find out the full replacement for the CEO, you're going to get some moves there. They announced that they have 2 interim CEOs that are already with the company. Pat even stepped down from the board, so it's already effective December 1st, so he's already gone. It was actually kind of abrupt, but remember, the next play is going to be when you find out who the real mover is going to be. If they get an all-star CEO, look what happened with Nike. Look at what happened with Starbucks. That could be very good, but if they get somebody kind of wishy-washy and then it turns into a Walgreens scenario, I mean, we pray, Habibi. We'll see. So it could be make it or break it depending on who they pick, but for now, getting rid of Pat, I think that's going to be very bullish. So that's going to be play number 1. Watch out for that. You're definitely going to get headlines. Then play number 2, OKTA. So this one has earnings tomorrow. They're in cyber, and I just like this as a far out of the money play. Why? Because we made a play the other day on Fastly that even popped up, but it has a deep option chain. It's been pinned. They sold off like 20-30%. I think we hit the last OKTA earnings, so I like it for the upside if you play it cheap enough. So that's the thing that attracted it to me. I would definitely go watch the earnings pricing video. I did that strategy. But I'm just going for the really cheap one, so I did go further out, and we will talk about that, but definitely watch the video. I have posted in the description of this video as well, but that is play number 2, and then finally, hello, old friend, TLT. So the TLT plays keep going up again. It was a good move, moving all of the other take profits and then going to TLT. I know TLT is still going to be wild, but be mindful of selling the rips. I'm glad it didn't blow out. I got nervous there, but you never know. Maybe it goes past 4-5 again, or maybe that was the bottom, but that's going to be crucial in both the short term and long term. But here's the deal. This whole short-term idea, now that you have the yield curve re-inverting, bro, the 2-year is now the safer play. So I do like long duration in the event of something happens, but just remember, if you're telling me the 2-year is paying out almost the same as the long end of the curve or the 2 years higher, and you are in an environment where Powell is cutting rates, that 2-year is going to have way less opportunity to get blown out and more upside if you're trying to speculate on the short term. So like I'm saying, that could be great, especially if we keep confirming more rate cuts. But if the market does what it did now and kind of front runs and then they sell off the 2-year and then they pivot and then Powell turns hawkish, you'll be screwed on this. So you do got to watch out. But like I'm telling you, just be mindful. The 2-year equates to 10-year and there's rate cuts going on and you're looking around there and you're kind of worried with Powell and all these narratives. Just remember, the 2-year is tied to Fed policy. If they keep staying in rate cut mode, I mean, and you want to play these bonds, especially after this move of them getting blown out, there's a short opportunity. If the curve reinverts and the short-term yields higher than the longer end, that's going to be where you want to start capturing those gains now. Yeah, I'm still going to have longer-term bond plays there, and I'm still in the TLT, and I'm still going to be mindful of those rips. But like I'm saying here, this might develop another opportunity now on the short end of the curve. So we'll see what happens. Maybe you could play some flatteners, but that'll be exciting. But that is play number 3. As far as everything else today, I made 4 different plays today. 3 of them are new additions. 1 was a sell, and I added CRM. They're going to report tomorrow. They both went down, so I kind of overpaid for these. Maybe there was too much hype. I kind of waited till it went down, but they got clapped. They have a wide spread. I grabbed a 395 call, 3 of them at 72 cents and 280, 3 of them at 70 cents. They were, the puts were 2 standard deviations. These are a little bit out, so maybe that's what I get for overpaying. But CRM, remember, this thing has moved kind of like Meta, so it's an expensive stock. It's already at those highs, but I think it can move a lot. But I'm going to try to get rid of these tomorrow ahead of earnings. Hopefully we get more volume and a premium boost. But that was play number 1. And then NVCR, remember, they had buyout news. This was like a couple weeks ago, and we made just a quick snake on the news. I grabbed January plays and, grabbed them at 40 cents. They had a phase 3 biotech or I think it was pancreatic cancer drug today, and this thing went absolutely insane. Stock went up 50%. We already had options. They went up 500%. They were out of the money, so I said, hey, let me sell one, make the other one free. So we got good profits on the make it free, and then still got one more option, and then I grabbed 2 of the OKTAs. So this is what I was saying here. This one has a little bit more time. That's why it's way further out the money, but go look at that January chain. It runs deep, but OKTA, it's moved around a lot. I think the cheaper the play, the better. Don't get your hopes up. Don't play it large. If I can make these free ahead of earnings, I will tomorrow. That's why I grabbed more than one. But at 30 cents, if you get it for $10 too, the cheaper plays on this, I think it's a better risk reward to the upside. Definitely a lotto, but you don't have to risk that much. But not a recommendation. Be careful. That's just what I did. But that was the third play. And then finally, Intel. After it sold off, I liked it in the morning. I didn't want to chase it after that run. I thought it was good news, but it sold off and it went from positive 5 or 6% to negative. So I'm like, let me grab some. It was at 20. It was 50 cents in the money. These plays went for $1.40 or something, and then it came down to negative. I'm like, you know what? Sometimes the IV is a lot stickier, but this time it wasn't. Intel options are trash. I was really scared by it, but I grabbed 2 of these, 39 cents, a little expensive. Hopefully we could make those free, and then we get a bounce in Intel. But other than that, going to be watching the data very closely. We'll see if tomorrow actually gives us a move. Other than that, though, it will be all about the bond market. And remember the themes: S&P 493, the Trump trade, the dollar, all that good stuff, and you'll be good. Don't forget about the bonds, too. But, Chad, that is all I have, and that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the seed never looks like what comes out of it. Do not despise the days of small beginnings. Do not fall for the misdirection. Understand what you got, baby. Plant the seed and let it grow and take care of it. And remember the importance of wisdom. It's invisible, baby. Let's go. Strengthen that in your discipline, but drink that water. Stay hydrated, healthy, all that good stuff. I'll see you in the morning on Horn.